Thank you so much, everyone. Let's start with the first panel discussion for the day. And for that, I would like to call Mr. Sanjay Patni on the dais. He is the Associate Director and National Head, Institutional Sales, Mirae Asset Investment Managers, India Private Limited. Mr. Patni manages institutional business vertical for India, Mirae Asset Investment Managers, India Private Limited. In this capacity, he is interested upon to handle and enhance institutional business in India. Along with his team, he advises corporate clients, family offices, bank treasuries, retirement funds, and UHNIS promoters channel partner to take prudent step to consider asset management product basket opportunities to invest in India and overseas market. Mr. Sanjay carries over 25 years of experience primarily into banking and financial service industry. He wears a hat of financial advisor and keenly observes the capital markets. Prior to joining Mirae AMC, Sanjay worked with well-known Indian and global brands like Franklin Templeton, Nippon India AMC, HDFC Bank, Philips India, Kinetic Energy, etc. Sanjay is an electronics and communication engineer and MBA from Pune University. He is an avid traveler, marathoner, and lover of music. As per him, his experience stands on three key pillars, that is relationship, credibility, prudent timely advisory, and execution in simple steps. Along with Mr. Sanjay, I would request all the panelists, Mr. Venkataraman GS, CFO Maveric Systems Limited, Mr. Nithya Cadambi, Senior Director Finance Operations and Facility Commvault, Mr. Shailesh Agrawal, VP Finance Quest Global, and Mr. Vidhan Kedia, Country Finance Head AbbVie. Can we have a huge round of applause for all the panelists and the moderator?
Okay. Good morning, everyone. I think when people are trying to say funny moments, people were just thinking, though he said, these are finance guys. You're saying finance guys are not funny? Obviously they are. No doubt about it. My life has revolved around CFOs and treasurers for last almost 20-25 years now in my career, so I don't believe that, okay? Including all of them. I know them very well, for sure. Good morning, everyone. My name is Sanjay Patni. I take care of institutional business relationship for Mirae Asset. Mirae is a global firm. It's a South Korean organization. It's a financial conglomerate based in Seoul, South Korea. Present to about 59 countries now, and pure asset manager. The only thing which they're not into is a banking. That I can tell you for sure worldwide. Pretty large organization, managing almost $730 billion plus across assets of various kinds. In India, we are there for last 17 years now, starting to 7, 8, and it's been phenomenal journey for the organization today, wherein you find India is an ever-growing, evolving, and compounded growth market for any multinational company, and that's what you've seen in India for us as well. We are almost over 2 lakh crore AUM now, 9th largest in India in asset management business. Beyond this, I can tell you for sure, that's an AMC which you may know. Many of you may be invested personally also, but beyond that, Mirae now in India is into multiple businesses. Maybe it may be of benefit to you. We are into investment banking business. We have a group company called Mirae Asset Capital Markets. We are into merchant banking business. We are into stockbroking business. We have a brand called M-Stock, in case if anyone you're using. It's a discount brokerage business. It's in the verge of acquiring Sher Khan from BNP. It's a 3,500 crore buyout waiting for RBI approval. It's already in the public domain for sure. We are into venture capital business. We have, so when we come to Bangalore, I can tell you Mirae as a venture house has stakes in many companies in Bangalore because it's a startup like gentleman mentioned there for sure. So, and then we are into NBFC business because in NBFC what we try to teach Indian investors, because Indians we generally have a human psychology, we'll just go, if you need money, we just go and sell. Whether it's mutual fund or stocks or whatever. In our organization, we are trying to impart knowledge in people saying that why do you need to sell if you need interim liquidity? Take a loan against it. Collateralized loan is the best thing to do. Why do you need to sell your assets every point in time? Hold it, you'll make money for sure. And that's what NBFC is doing big time. It's an app based, there's no branches there, but just go on the app. In 5 minutes, your credit limits are set there. Disbursements are ready for you. That's a large organization. So we are a large firm there in India now, so we're into everything in India. All businesses have grown, sizable and profitable, for sure, no doubt about it. So it's a large stake. And last but not the least, we opened recently Gift City office also. In case anyone of you are interested, that's also we started launching funds there. So we already launched first fund where people from overseas investor want to invest in India. And I'm sure all of you agree with me that India is the biggest interest for all the foreign investors today. No doubt about it. And we are seeing that. Yep. So that's a bit about Mirae. I thought let me at least tell you that because instead people think Mirae is only mutual fund. It's far beyond that now in India. Okay, I thought let me at least inform that to all of you. Okay, let me come to the today's panel. That's the first panel discussion for this morning. I think there is anything which I do on this stage and wherever I am there, I think for me, there is one thing which I always remember is the cricket for sure. No doubt about it. That's my passion. Maybe many of you may be equal to me there as well. I can only tell you one thing. When you think about cricket, you go back long back where you'll say when we started this world, where we saw test cricket, right? That was the first thing. Cricket means it used to be only test cricket. We saw those batsmen, the legends of the batsmen who became very successful in the boring business called as test cricket. Okay, I'm sure I can challenge if I ask in this forum, how many people have already gone to stadium and saw a test cricket match? Can I ask somebody to raise the money as you have seen? Don't shy away, I'm not taking any test anyway. Okay, you will not find even 2% people have gone to stadium to watch test cricket. Okay, after that we started one days. One day became the race in the country, and I'm sure we won the World Cup long back under Dhoni, and I think today. Can I ask you again, how many people have gone and seen one-day matches in the stadium? Yeah, see, I can definitely see so many hands coming up. Now let me ask second question. You have a glitz, glamour, excitement, thrill, which is called as a 2020 cricket. Okay, the world changed. Okay, today the selection of a player also is done through technology. I'm sure many of you must have watched today the auction which happens of IPL and it's with technology. People are using all the buttons to try and find out what happens then. There is a technology involved there for sure. 2020. Now let me ask you last question. 2020, how many people have gone to stadium and watched? Sadly, there are so many people don't watch cricket in the stadiums, even in 2020. Okay, surprising to me though. Okay, or they don't want to spend money, or they don't make money in the markets to spend that money. Okay, doesn't matter. I'm only trying to tell you is that we have seen real transformation from test cricket to one day to 2020, and many of you may not know there is a 10-20 cricket 10-10 match also. There is a 10-over matches also which get played in many places today. Okay. Now let me go to investment side. I belong to financial services markets. Let me also give you some thought process there. Look at about it. I'm a Marwari from Rajasthan for sure, Marwari Jain, and I've always seen since my childhood only 3 or 4 things used to happen. You will have money in the bank, you will find money invested in gold, you will find money invested in maybe real estate, okay, and that is maximum you will keep cash in hand for sure. That used to be the strategy all this point in time. You know what happens today? When I see now in my 25 years plus career and being part of financial markets, when I go and talk to many people today, you will find that people are investing in stocks big time. Okay, I'm sure Bangalore is a place of millennials. You will find everyone want to just go and punch their order books. You'll find that for sure. You'll find people investing in overseas markets today because it has become very easy to go and invest in stocks or mutual fund or exchange traded funds, etc. You find many people investing not in gold. It's in gold ETF today. Even if you come to Bombay some point in time recently, you will find there are huge holdings by World Gold Council saying don't invest in gold, invest in gold ETFs. So don't hold your physical gold in your home. It's difficult to manage. It has changed. You invest in real estate. I'm sure Bangalore is a place people talk about not real estate, REITs. Okay? This is how you've seen the change coming up. You've seen I'm sure all of us have seen provident fund getting deducted from our salary every month. That has also changed to what? NPS. Right? You've seen that changing. And you've seen FDs, when RBI governor himself starts talking about get worried from mutual funds, I think mutual funds are here. That's where it has started working, where money is from mutual fund moving to, FDs moving to mutual funds. I'm only trying to leave one thought. Now I'm trying to connect with this panel saying that how world has transformed over a period of time, where you've seen the transformation of cricket, you've seen, look at the investment, how it is seen, and in this panel, I can tell you for sure during this next 35 minutes of discussion, you'll find that your financial world under the aegis of CFOs and finance executives, how it has transformed in a real manner, And that is where I think this conversation will go. On that note, let me welcome all of you gentlemen on the stage. I thought let me just put across some thoughts around it. I think it's very important because when we write navigating financial transformation in the uncertain world, I think all of you played a big role, no doubt about it. I thought let me jump onto the conversation here for sure. Maybe Shailesh, maybe you can pick up the mic. Maybe my first question is, when I see so many companies here on the right side on the banner, I see so many technology companies, fintech companies, etc. And I think that's a trend across India today. In your case, how important is digital transformation for you as a CFO, and what should be the approach to the digital transformation in reality?
So I think everyone is talking about digital transformation, right, these days. If you look at the business environment is becoming very dynamic. The economies are coming very close to each other, getting integrated. Anything which is happening in the US market has an impact in Indian market as well. And moreover, you see the regulators. All of us deal with the regulators on a day-to-day basis, and the way government is adopting the technology in different areas, whether it's the GST, income tax, or is Aadhaar, UPI, your DPI, and so on. Digital transformation is becoming very, very important. It's not something nice to have. It is becoming must have. It is becoming a hygiene at this point of time. Now, what approach we should take when we do the digital transformation in a company, it all depends on what objective you would like to achieve, what kind of stage you are in terms of a digital transformation. Like, if this is a new company, you want to just implement the system or move from a manual system to a complete automated way of working, there's a different approach. Versus you already have a lot of system around it, systems are not integrated very well, there is multiple source of master data. In that case, the approach will be different. So before we decide on the approach, we need to first set the objective in mind. What exactly we want to achieve through a digital transformation. And then to achieve that objective, what are the different initiatives? Put a proper program management structure in place and then execute. And one of the things which I learned, I've been part of many digital transformation journey, and even currently we are running a digital transformation initiative in the Quest Global. I've seen, the first step towards the digital transformation is to look at the processes, the business processes, and it's very important we have a cross-functional view of the business process. And we should not look at silos. For example, if I want to automate the payroll process, I should not only look at input coming from HR functions and we are just taking input, doing the payroll processing, doing the tax calculations and remitting the salary. We should also look at how those inputs are coming from HR, like how they manage their compensation, how they manage their leave, how they manage their attendance. So it's very, very important for us to look at the cross-functional view of the business processes before we embark on the journey of a digital transformation. One more very important point is the master data management. For example, we come from an IT services company. We have people as one of the master data for us. Then you have a customer, you have vendor, you have an employee. And our employee work on the customer project. The project becomes a master data. And I've seen many organizations where they keep, reconciling. There are multiple sources of master data, and when they look at the report, they get into a lot of reconciliation. And in fact, in our company also we have the similar kind of issues, and we keep doing the reconciliations amongst data generated from one system versus another system. So it's very important to have a single source of truth. Very important, fix your master data first, look at your business processes, and then, implement the digital transformation. To give you an example of my own company where we are running the digital transformation. So our objective which we set is, we would like to have the audit committee meeting on the 15th of the subsequent month after the quarter end. To achieve this, what all I need to do? I need to look at the cost aspect, which are the processes which have the cost element, like P2P process, your payroll processes, your subcontractor processes, your provision process. How do I streamline that process and implement system around it? Then you have a revenue recognition process, your O2C process, collection, invoicing, and so on. Then you have a GL, intercompany, taxation, and each of those buckets how do I automate so that when I start my book closure, all the information is available, and then I need to just get the audit done and make the board deck, make the presentation or the MIS. So I think we need to take very systematic approach, identify those individual components or the initiative, have a proper program management structure, and then do the digital transformation initiative.
Sure. No, I completely agree with you. So, Nithya, if I were to, in succession to what Shailesh mentioned, one of the most important thing is the processes. Finally, end of the day, and you've been in finance field for so long, what has changed in financial processes over a period of last maybe 5-7 years specifically?
Yeah, thank you for that question. And I still remember the first day I did my article, I joined for my articleship with PricewaterhouseCoopers. What I did was I was given a printout, and which was taken from an Excel worksheet and asked to have a calculator and add up all of the numbers to see if they totaled accurately, right? Casting and comparing. I think a lot of us started off our careers with manually adding on calculators and seeing if Excel has calculated it correctly. I think we have come a very, very long way from that. The journey of transformation for us as finance professionals or CFOs, I think, started about 2 decades ago with the ERPs picking up a lot of traction, right? And I think as a first step, we did a good job of getting our accounting and accounting systems on to technology. But then ERPs don't take care of everything that needs to be taken care of. There are always small processes, always small things that people do which are manual. Reconciliations, three-way matches. There are some cash, inwards kind of mapping. He spoke about payroll-related aspects. We do a lot of manual work especially on the field-related operations side. Like when you look at, pipeline conversions or metrics related to that, or how are we looking at renewals, how are we mapping how our sales renewals are coming up. So there are a lot of manual processes. I'm sure all of you can relate to this, right? Like a large part of your teams may still be doing manual processes which can be automated. I think it has to be a conscious effort from our side. Our resources are finite. Like we can, and finance teams, again, all of you will agree with me, we are very lean, right? Like we have very few people and we try to do a lot more. So unless we constantly keep a watch for processes which are repeatable, which people are wasting time on, which can be automated, we should, we have to keep a constant eye on that and keep working on implementing AIs or bots. I think RPA came up in a very big way a few years ago. Now it's part of our lives, but I think we need to keep a constant watch for it, saying what can we automate as our processes. Yeah. And there are a lot of, now with Gen AI and with a lot of, automating tools, you see all of those names. Like, there are so many companies, boutique companies, which have such unique products which we can incorporate into our processes to make our lives easier. Again, we need to be, I think Shailesh cautioned us saying you shouldn't have so many tools and each thing throws out a different report. None of the numbers match with each other, so that we shouldn't get into that, scenario. But we should keep a watch for tools. It may look small, but it makes a huge difference in the time that our teams are spending on unwanted activities. And reporting and analytics is now, I think we have come past, the basics, hygiene of accounting and certain processes being automated. Now we need to look at reporting and analytics, right? I think, and all my speakers before have, spoken about this, about how the role of a CFO is not like it's not accounting or number crunching or like the bean counter approach anymore. We need to be strategic partners to the business. And for that, we need to be providing the right insights and analytics. And Gen AI has so many tools are coming up now which can help us provide the right insights in terms of, how customer behavior is happening, how if customers are not renewing your licenses, why are they not renewing your licenses? What is the competitive landscape? How can we really approach our, we can really help our business augment the revenue streams as CFO. So I think there are lots of tools available and lot of analytics. We need to make sure we are training our teams to think that way, not just process, I will do step 1, 2, 3, 4 and I'll be done with it. Look at more how we can analytically help the business. I think that's where we're going.
Sure. So when I look at financial markets, I feel there's so much of volatility around it, or it's secular one side. So Venkat, my question to you is, you have seen journey in multiple companies in senior roles, being a CFO, analytics, automation, and now we're talking about transformation. But in this uncertain business environment, is it bothering, or is it really helping?
Yeah, so I think given the nature of business, there are always going to be periods where your business is doing extremely well, and then in those periods you're trying to manage volumes, help have systems in place to support the business, and there will be times where the business is not doing well. I think I work for Maveric. It's an IT services company. We are BFS focused. So I think exactly the point you're making, right? In the last couple of years, banks have had a lot of challenges worldwide.
Yeah.
They've been extremely cautious in terms of the kinds of spends they want to do on technology, and therefore opportunities for growing accounts within the banks has always been a challenge. So that's something which we are seeing as we speak, in a way, I would say. So uncertainties is always going to be there. So how do you support the business or work strategically with the business teams to manage that is critical. Some of the areas or some of the ways I see we can look to support is, given the fact that it is uncertain and there is a lot of volatility in terms of how business is and how demand is changing, how do we be flexible? Otherwise, we are all used to doing annual plans, right? You do an annual plan sometime in December, January, depending on the financial year you're running, and it's a massive exercise. You'll do it for 2 months, and then you've done a plan, and the plan is frozen, and after that, you just only are running actuals against it and reporting budgets versus actuals. Versus how do you kind of be a little more flexible, run a more flexible model where you say that you will still have an annual plan, but then you're running a rolling plan in terms of looking at your next 2 quarters, next 3 quarters, how do the plans change, and how are you flexible about it, and how are you nimble about it, right? And the moment you start looking at your budgets on a quarterly basis, given the way the business momentum is, you're also going to be able to make adjustments on the investments you're making. Of course, there will be some investments which will be front-loaded, given that you may want to expand to a new market. Correct. Some new sales teams you'll have to put in place. But there will be many investments which are not necessarily front-loaded. So how do you kind of manage that better because of the way the business environment is changing, right? So that's one example I can think of where you can help and work with the business to support them. Two, which I think it's a problem which many of us deal with, is forecast, right? How do you forecast accurately? How do you forecast revenues accurately, and how do you use that information to take decisions? In an IT services business, I think that's a common thing which all companies deal with in terms of forecasting. And typically, you would forecast for 3 months or 2 months or maybe even 6 months if you have a very robust process. Yeah. And the moment you have that process in place which is working, and you also have models built where you have comfort that it will have high degree of accuracy. Let's say we're running at a 95-98% level of accuracy, then it's easy to take decisions in terms of capacity, building capacity, or slowing down on creating capacity, or even taking decision in terms of what you don't want to do with that excess capacity. How much of it can you cross-scale? How much of you can you have to take a call in terms of what to do in that excess capacity in the services business? So I think there are multiple areas where, as finance professionals, as CFOs, we can help work with the business and support them in uncertain times, particularly in terms of how do you kind of provide visibility for revenue, how do you provide visibility on collections, again, a major area where you can support, because there is now enough data available where you can use and understand patterns of how customers are paying and what can you do to ensure that you are in the cycle. Since many of us work with large enterprises, they all have cycles, right? They will have an outsourced partner. If you don't provide that invoice on the first month, first Thursday or the first Friday, you miss the cycle. Then you're going to come into the next cycle, which will be 2 weeks away or 3 weeks away. Right. So how do you kind of use information and also ensure that your processes are aligned so that you're able to support the business? Because in uncertain times, it is cash, costs, and revenue. If you're able to support in each of these areas, there is great value.
No, I completely agree with you. So Vidhan, welcome. I pick up where what Venkat is talking about. For example, people say that talk to business. Okay. I'm sure today's CFO's world is not about what you are doing alone. I think you play more strategic role along with the business teams also. So from a value additive to business, okay. And one thing which always comes to my disruption, because when data moves so fast, no, I always get worried at times as well. Okay, being a business guy, I can tell you even more. Okay. How do you see that getting value additive done in this world of transformation? What is your experience there?
No, firstly, thanks for the question, Sanjay, and very good afternoon to everyone, to this August audience, and my apologies for being slightly late. Thanks to the traffic here in Bangalore, and probably as we are talking about some transformations, maybe the city also kind of gets transformed. Maybe
That's
with
first
the
thing is
aid
need to
of,
be transformed in Bangalore.
yeah.
Yes.
So to start with, but to answer your question or to address that, I think you touched upon two very critical aspects, Sanjay. One is we are seeing a very fast pace of transformation within companies, within corporates, whether it is digital transformation, whether it is about the business cycles changing very fast and those kind of things. And then how does finance continue to remain value additive there? So I think we keep having these discussions with the business team that how can we make finance more relevant in the corporates. Like I represent AbbVie, which is one of the leading innovator pharma companies within the pharma space. And I think the key, as I reflect, is given the fact that business cycles are changing very fast, we have multitude of tools. So I think Venkat also spoke, Nithya also spoke about being flexible and also being simple. So I think one of the mission statements what we adopted for finance within AbbVie is the key role of finance. The first step is how do you make things simple and valuable. I think instead of going to the fancy jargons and making things complicated, I think one of the things which Nithya spoke, I liked is, for example, with respect to investments made by banks on these digital tools. Sometimes we just are kind of alluded by the peer pressure in terms of making investments on these digital tools. What we need to ensure is that there should be a single source of truth rather than kind of multiple sources coming through. So when it comes to value addition, I think the first thing what finance kind of can play a key role, especially in these dynamic times, is how to make things simple for business to understand. Yeah. Because business cycles have become very short. Earlier they used to be in decades. These days we know because of geopolitical factors, because of macro factors, things change very fast within the industry and then even at the micro level. So that is where a CFO or a finance team can add value to the CEO and his team by making things simple and clear in terms of revenues, costs, and the profitability. Where are we headed? What is the direction? And that is where you can then leverage some of these digital tools which we are talking about. I think the digital tools, they are a potent tool, but what we make out of it is important. If we get lost in the frenzy of these digital tools, I think that is where we are getting lost in that maze. But if we try to simplify, have one or two key investments in terms of these digital tools which give real-time information, that is where a finance partner can then actually work with the business. Because these days, Sanjay, I think it is very critical versus the erstwhile times that finance needs to wear the hat of business more actually than finance itself. Instead of doing the operating procedures or day-to-day operations, what is more critical is how well you understand business. And you can understand business better only if you have time to do that. And that is where you need to digitize your day-to-day operations so that you free up some time and then act as a business partner and understand business. And it is only when you understand the nuances of the business and the undercurrents playing, that is where you can be an advisor to the business that this is the kind of the next pit hole what I see for the business, and this is how we should navigate. So I think it's about making things simple and also kind of rationalizing the investments when it comes to digital and then freeing up time to be a value-additive partner.
Fair point.
Just wanted to add what Vedant has said. the simplicity is very, very important. He has used the word simplicity many times. So when I talked about business process, I also meant, before we do any digital transformation, it's important to relook at the cross-functional view of business processes, look at how do we simplify, and then only start a digital transformation journey. There are so many tools available in the market, and many times when somebody talk about digital transformation, they only talk about implementation of this tool. And you will get into a situation where you have so many tools in the company not talking to each other and getting into reconciliations and that kind of issue. So it's very important we should have the complete roadmap of the business processes and see which tool will fit in where, and then only start the journey. But today, there are so many tools in the market, so I think we have to be very, very careful, otherwise one can get into a mess, even after implementation of the tools.
Shailesh, so we talked about financial processes, we talked about volatility, we talked about tools, etc. you talked about. Another pertinent question which comes to me is that maybe the two things, treasury management and the risk management, because now when Fed cut 50 basis point rate cut, you cannot say I'm isolated. Yeah. All the economies are integrated today. You see Hong Kong cutting immediately and Bank of England getting jitters and Japan getting jitters, of course. So from the treasury management point of view and the risk management point of view, what transformation have you seen there? Maybe you want to give a quick answer to that.
When you talk about risk management, it's a very vast subject. You have a business risk, you have geopolitical risk, you have so many, compliance risk and so on. But I will limit my pointers to the treasury management. And if you look at treasury part, so we have, if you are a global company, have operations in multiple countries, you have so many legal entities, the way we have, like for example, we deal in 18 currencies worldwide. And we have 150 plus bank account in different countries. So we have 50 plus legal entities where each legal entity will have a different kind of functional currency where we need to report, and we do the consolidation in US dollar. So when I look at the risk management part of it, so there is multiple risks. One is the foreign exchange risk itself, where I need to protect the individual profit and loss account of those countries. And there has to be very, very efficient hedging strategy. But at the same time, if I protect the rupee P&L, when I convert rupee into dollar, I might have the FCTR. So I need to protect that as well, right? So it is a very complex foreign exchange risk management which we do, and in a global company. Similarly, when you are talking about a highly leveraged balance sheet, we have, let's say, loan of around $300–400 million sitting on our balance sheet, and that is linked with SOFR. And as Sanjay was saying, there is a rate cut. And that loan is a bullet payment after 3 years, 4 years and all. And how do you manage your interest rate risk, right?
Yeah.
Again, it becomes very, very important for us. Do you need to take a IRS? Do you need to take some kind of cap collar options and so on? Similarly, as I said, we have 150 plus bank accounts, making sure each bank account have the sufficient liquidity so that the vendor payment, the salary payment can go on time. And managing that itself is a big task. How do we do it? So we need to strike a balance. We want to minimize our ideal funds in those bank accounts because they may or may not give you any return. And on the other side, you have the borrowing sitting on your balance sheet. But at the same time, you don't want to get into the liquidity risk, right? Yeah. So how to strike a balance between this, right? Similarly, you have the investment. Now, where do I do the investment? Should I do with Mirae in liquid funds or overnight funds, or do I do fixed deposit, or it all depends on the company policy. And for that, you need to have a very strong system. So what we have done to mitigate some of this is we have complete visibility on our cash flows. So we have proper cash flow forecasting system in different currencies, different countries. And based on that, we take those management decisions. And again, the technology is playing a very important role. In fact, I have a dashboard created for us where I manage the entire treasury operation using my mobile phone. where I can see where all I have invested, where all I have the borrowing, what is the balance in different currencies, different bank account, what kind of relationship we have, what is my currency-wise exposure, how much hedging I need to do, and what is my mark-to-market at any given point of time. So that kind of information is available in Power BI dashboard, which we operate from our mobile phone.
Sure.
So I think what I'm saying is, one is the processes part, the second part is how do you automate your processes and use the technology in terms of a decision making, and that can work even in the Forex risk management or any kind of risk management for that matter.
No, I completely agree with you, but I'll tell you what, Nithya, maybe let me leave that question to you. Being a financial services person, you said you're using your mobile for treasury management. I get worried about from mobile, if you ask me, okay? Because Google is listening to what you are saying right now. And unfortunately, you pick up your Facebook, Instagram account right now, you might find all that getting popped up, okay, somewhere. So for me, that's the biggest risk which I run. Maybe cyber risk is another thing which I'm worried about. So in your process, when data analytics, so me data is nothing. Analytics is what everything is all about. But beyond that, one is decision making, that's important. But whatever Shailesh was talking about, for example, what strategies do you use to do that? That's important. Tool is one part. So in your point of view, financial risk management, what strategies do you use to do that? To mitigate that, maybe, I'm sure.
Okay. For this question, I'm going to step a little away from technology.
Sure.
I think while we are using technology as tools to analyze what we are doing, I think the very core fundamental aspect of it is how much as CFOs are we clued into the business. Now, Commvault is globally into data backup, and it's a cloud recovery solution which provides high cyber resiliency, right? And in India, we have GCC. So in a GCC setup, people are our biggest assets. Now, people's minds are our biggest assets. And for us, from a GCC point of view, one of the biggest risks is talent. So as CFOs, not only are we looking at financial management, but we have to also look at the overall risk landscape of the organization. So if talent is one of the biggest challenges, and there will be issues, how are we helping the partner with the business to mitigate that risk? So recently what we did was we realized that we want to expand a particular support group here in Bangalore, but then we didn't have the language support capabilities to support Europe. So how can we set up an entity in Egypt, in Cairo, which has a lot of European language speaking skills, which will support which will be able to easily support European time zone, and it will mitigate some of the risks of having the entire support organization in Bangalore, right? So this is one of the examples of how, as CFOs, we partner with the business, and while we use data and analytics to overall look at trends, we should also be keeping our eyes open for opportunities, not just what is done traditionally, but how we can support the business better.
So Venkat, we talked about many things around transformation. For what I feel today, is it restricted to only finance domain more, or whole organization needs that connectivity of transformation and tools around it, etc. and all that? Because integration is the way.
Absolutely. I think, Sanjay, you have hit the point on the nail. I think the way the businesses are managed today, it's not that one function can say I'm completely digitized and have done all my digital transformation initiatives and we are good. I think all critical functions, and there are linkages. I think given the way all of us operate, there are linkages between multiple departments and functions within an organization. So unless there's an org view you take of your transformation initiatives and see how does it fall in between, or where are the areas of gaps, or where are the significant gaps which we need to invest and make changes, we're not going to get desired benefits of all your digital transformation initiatives. Otherwise, you will have some pockets where you will have some very good initiatives, programs running, but it will not give the desired benefits for the organization overall. So it's very critical. It needs to be looked at on an overall basis, and that's where I think as CFOs we can play that role, because you have access to the senior management. You are part of multiple conversations with all senior function leaders at a board level. So you have a great ability to influence the process and ensure that it is looked at across the organization and not in silos.
No, for sure, I understand that, though they are ringing the bell, but let me ask maybe last question to Vidhan. In my view, what it was business cycle, if you were to use, and what it is today, it's pretty short-lived today. I think the reason is data, okay, for sure. So how can CFO play that role of ensuring growth in volatile world, growth in a bull world, growth in every world?
So I think that's a great question, Sanjay, because I agree that we live in volatile times. Whether we look at the stock markets or whether we look at the business, these times are volatile and things change in the flick of an eye, kind of a thing. And that is where the role of a finance function or a CFO becomes that much more critical. So essentially, he's a co-pilot, finance as a function when it comes to the business, and that is where you need to have the right kind of vision and preempt the business in terms of what can be the cyclical changes or what are the changes which are upcoming in the next quarter versus times earlier where people used to do long-range planning. So these days when we discuss within the company also, long-range plans, I think sometimes they are being questioned also in terms of their viability and whether we need to have a realistic 2 years plan or we need to have a long-range plan which is more profiling. So I think definitely the focus and the eye on the business that has to be very close from a finance perspective, and that is where he can be an aid to business. And just adding to what Venkat said, I think the transformation when we talk about should not be isolated to one function, whether it is finance or it has to be end to end, and that is why what Shailesh was mentioning, when we are buying these digital tools, there it is very critical that it should be bespoke to our requirements rather than something which is kind of off the shelf kind of a product, because until that is not there, it will not make sense to our business. So that is where finance can play a critical role, because finance understands things end to end, from a supply chain to finance, then from the commercial side, and so it understands the entire value stream. And I think that understanding is the key in terms of making finance as the key pivotal success factor for business. Understanding is the key, because human judgment cannot be replaced by digital tools. Yeah.
No, fair point. I think you look at processes, you talk about tools, you talked about volatility, you talked about treasury or risk management. I think it's all integrated to me. There's no doubt about it. Okay, let me jump on. I'll ask you a quick question, but you don't have time to answer those questions. Okay, you have maybe 6 seconds to answer that question. Okay. Maybe I'll ask those questions quickly. Maybe you can pick up the mics if you want to pick up that for sure. So Venkat, to you first question. Which software app did you use for the first time in finance?
Microsoft Excel.
I've used DOS as well as Lotus 123.
Okay.
Lotus Notes.
Lotus.
So I think Tally and Excel, going back to the 90s.
I was actually wondering why nobody's saying Tally about it. I thought this was the first one the world came in. Okay, but doesn't matter. Yeah, maybe. I mean, talking about a software app. So maybe, for example. So Venkat, let me come to you again. Maybe 50 basis point rate cut. How many rate cuts are you seeing in India? Maybe in 3 months' time.
None, I would say.
None.
I would say 25 pips.
25.
In the last 3 months.
Next 3 months.
In the next 3 months.
India.
None.
None.
Easily 25 to 30 pips, another cut.
25 basis points. Okay. One thing in digital transformation world which you are a part of, you've seen whatever. All of you talk about goody things all the time. Okay. All this panel discussion. Let me ask you one thing which has not changed. It deserves to change.
I think maybe, I think over the years I've seen multiple companies pick up ERP implementations. And I think in multiple organizations I've been part of, I've seen ERP switches happening from the big ones, right? The Oracle to SAP or the vice versa. So I think despite all the understanding and knowledge companies have, people have in terms of what an ERP system can do, cannot do, there are always either very high unrealistic expectation on these ERP systems, which kind of then leads to poor implementation and therefore challenges in what you would require or what you would expect as an output versus...
so still it deserves to change.
Yeah. So I think that's one area I still feel, I think companies still wrestle with and not get it right and then figure out how to solve it later.
Shailesh?
For me, what I feel is, it's all about how do you implement things,
Okay.
tools have all the features, but it's all important for you to how to implement, how to do the change management. Because at the end of the day, people have to use the solution. And that is where I've seen a lot of digital transformation does not give the desired results.
I completely agree. Nithya?
I think what still we need to work a lot more on is the attitude of the finance teams of being extremely conservative and extremely risk averse. I think that needs to change.
Interesting to hear that.
I think similar lines, Sanjay. So I think in one word, if I see what needs to change is mindset. I think we have gone miles ahead in terms of these digital tools, but when it comes to, as Shailesh mentioned, when it comes to implementation on the ground, that is where the mindset becomes a barrier. How do you cross collaborate? We remain in our silos. We do not cross. We talk of end-to-end digital transformation, but when we actually work on the ground, we remain within our function. Our thoughts are confined.
Understand that. Last question, maybe 20 seconds. One day, test cricket or 2020?
Test cricket.
Test cricket.
10 overs, sorry.
10
overs.
10 overs, okay.
2020.
2020.
2020.
2020. Okay, interesting. Thank you so much, panelists, for your candid views and being open about it. Thank you everyone for listening. I hope you have some takeaways around it. And you get transformed, and please transform Bangalore traffic for sure. Thank you so much.
Thank you so much. Thank you so much, Mr. Sanjay. And to do the honors, I would like to call Mr. Atul Jain from IKEA.